All right, here it is Friday. We've got our grain markets opening up, and to be real honest with you, they are going all directions. So let's try and corral this thing and see what's up with the latest quotes provided by Bar Chart. We begin with the corn. Here we go with a look at September. It is now 3 cents lower at 5.72 3/4. December corn, the new crop month, 2 1/4 lower at 5.71 1/4. Now, we have been on both sides of unchanged if you consider the overnight trade and the early morning trade here so far today. Let's jump on over to the soybean trade. And again, I'll remind you, no overnight export sales again this morning. Soybeans are higher, though. And now you have the August 6 1/2 higher at 14.25. September up 8 1/4. It's a 13.25 1/2. And now you have November trading 8 1/2 higher at 13.10 per bushel. Well, let's go to the wheat now with the soybeans going higher. Chicago September wheat down, and down by a lot, down 36 cents at 7.70 1/4. And December down 33 1/4 here this morning. In the Kansas City hard red wheat, we're down 35 1/4 on September, all the way down to 8.26 here this morning. Minneapolis wheat, the spring wheat trade, September down 27 cents at 8.85 1/2. Let's bring in Chris Swift. He's with Swift Trading, and he's based in Nashville. And, well, Chris, it's kind of a tale of two different kinds of markets here today. Soybeans going one way, all the corn and wheat markets going the other, mainly led by the wheat. I understand there's a lot of confusion over what may or may not happen with grain coming out of Ukraine, and talks are continuing. I understand they'll be talking this afternoon about maybe allowing some grain shipments out of there. Is that what's weighing on the wheat, do you think?
It's about the only thing that we can think of right now, Marlin, because yesterday we were trading plus on the day on the wheat, and then when that news came out, they took it straight down. Very little activity last night, and then this morning they're continuing to follow through. And then we look at corn and beans a little bit higher, and that's because those are still in the ground, and we still have some issues with those crops here in the United States. So what that wheat is, it's no increase in production whatsoever. All it is the ability to move some of the stored wheat, and best as we understand, I've listened to some comments this morning stating how difficult, regardless of whether they actually make this deal to go through or not, it's not that much grain, as well as it's very, very difficult logistically to try to get that ship loaded and out of port.
It seems like the trade is building in almost the best case scenario for U.S. corn and soybean production right now. We've heard of so many lost bushels and lost acres out in the western part of the Corn Belt. And yet they seem to be sticking to their guns that they expect a record yield.
And it is interesting to see that, because we don't believe that it will be that at all, because we see some of the damage here in the southeast, and understandably we're not in the heart. We understand that there are lots of corn areas there that are in best and will produce record, but when you get outside of the heart of the Corn Belt, every bit of it has some kind of damage to it. Even the irrigated corn is having a difficult time with this heat that we've got.
How much does that concern you? We haven't had any overnight business to speak of other than one sale of soybeans here a day or two ago, and that's been it for about a month.
It has been. Brazil, I think Brazil has got some beans and corn that they've been loading, and China has been buying more from them than they have from us. They're undercutting us a little bit on the corn price, which is probably some of the reason why we can't rally significantly. But as we come into August, every day that goes by, you know that more of the corn crop is now complete and won't change going forward hardly any at all. So I think that as we probably get into next week and get Monday's crop progress report, we'll see greater than 60 to 70% of the corn already have pollinated.
Okay, I wondered about that. Chris, we'll take a break right here. We'll come back and talk about the setup on our livestock trade here on a Friday when we come back. All right, we're back with Chris Swift, and we're going to talk about the livestock trade. In fact, let's go ahead and Chris, we'll go ahead and take a look at how the livestock trade is opening up. Let me bring up live cattle here, and we'll go right to the big board. Then we'll talk about the reports coming out a little later on today. On live cattle today, ahead of the report, we're actually higher. August is up 57 cents. We're at 136.30. In October now 62 cents higher to get things going. On the feeder cattle market, we have August 57 higher at 178.85. September is 75 higher at 182.05. On the lean hogs today, now keep in mind we also have that cold storage report later today. August lean hogs are 57 cents higher at 116.87. They've been in their own little orbit here this week. just kind of doing their own thing. October is down 22 at 95.55. About the same thing it was doing yesterday, where the August was higher and all the other months were lower. So let's go back to Chris Swift here and talk about this here. We have some fairly major reports coming out after the close today, but the markets will be shut down by then, and we're going to be looking at a cattle on feed report, a cattle inventory report, and a cold storage report. Explain the difference between the cattle on feed and the cattle inventory report, if you would, and what you're looking for.
Sure. The on-feed number consists of just our feedlot cattle. The on-feed number is the difference between the number of cattle marketed for the month minus the number of cattle placed, and that ends up with the on-feed number. Right now, it's guessed at about 11.3 million head on feed. That'd be down about 500,000 from last month's on there, and we look at it from anything below 11 million head on feed to be a little bit friendly, and anything above 12 to be a little bit negative towards market. And then the semi-annual cattle inventory report is for the herd size. That will incorporate all of the cattle, both dairy and beef, and then they will segregate those between those two categories, but they will go everything from weight classes to calves all the way up into cows. So it gives you a picture of what the entire herd size looks like, and the trade gets probably about 1/2 to 3/4 million head less in this semi-annual compared to the January of 22 number.
Which one do you think has potential for a bigger surprise today?
I think the inventory report probably could be a surprise. The on-feed numbers are pretty stable. We rarely get too much of a surprise in them. The inventory report could, but the inventory report is such a longer view of the industry, it tends not to have a direct impact on the market because, again, production is a very slow ordeal in the cattle business.
And on the cold storage, would that have any surprises today, do you think?
If anything, I think it would be a build. We've upped the cow slaughter immensely over the last couple of weeks. So if we've seen year-over-year builds, and sometimes we get month-over-month, they vary. But I would dare to say that this will show a pretty good size increase, especially since our exports have not been all that good.
I want to review the outside markets real quickly on the Dow Jones Industrial Average right now on the big board. We're 79 points higher on the September futures here in the early going. On the U.S. dollar index today, we have September futures 309 points lower at 106.495. And on West Texas Intermediate crude, September futures 20 cents higher is all at 96.55 per barrel. Thanks for the help, Chris. Appreciate it. You have a good weekend, too. We'll talk with you on Monday. Chris Swift of Swift Trading. So there you have it, Janet. The markets are open. I'll be here watching them all day.